Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach financial freedom as soon as possible. And today's video, I want to talk about the pretty big opportunity that there is, in my opinion, in 2023 when it comes to technology stocks or tech stocks. So in case you've been living under a rock in 2022, you know that the technology sector has been hit pretty hard in 2022, right? So stocks like Amazon and Google, Apple, Microsoft, or if you want to think of it as an index, a NASDAQ index, which is very tech heavy, has been hit pretty much, I would say, the hardest. Or the hardest sector hit in 2022. So the question becomes, how do we take advantage of this opportunity? Is there any income-oriented technology ETFs or covered call ETFs which have high income but have really a big concentration in technology stocks, which not only can we get high passive income every single month, but there's a lot of growth or capital appreciation? And the answer is yes, of course there is. There's plenty of them. So in this video, I'm going to review some of the best covered call technology specific or technology focused ETFs on both the Canadian market and the US market as well, because some pretty cool options on the US side, including a brand new one from Global X. So let's check them out together right now. So in Canada, guys, there are 5 pure technology covered call options that we're going to take, ETF options that we're going to take a look at. The first one is from CI, very popular one. The stock symbol is TXF, of course, the CI Tech Giants covered call ETF. So if you didn't know, a covered call ETF is basically just like a regular ETF. You know, there's stocks in there, and obviously there's going to be tech stocks in here, 25 approximately. And they also use, they write covered calls on a portion of the portfolio to generate income, right? Because tech stocks, don't forget, typically don't have, a lot of the technology companies either a very small dividend or no dividend at all, right? Like Amazon and Google, there's no dividend. Apple and Microsoft has one, for example, but it's very, very small. So the good news is that these stocks are fairly volatile, so you could get big premiums, or the fund manager could generate big premiums, which means high yield. So TXF is one of the very popular ones. You see here that the management fee is 0.65, MER of 0.71. I think that's actually the lowest in terms of management fee of the one we're going to check out. It's a pretty big fund, guys, almost 500 million here. And if you look at of course, you always click on portfolio here to see what kind of stocks they're in. None of them should surprise you. It's basically 25 of the biggest technology companies out there. You'll probably recognize a lot of them. So it's pretty much very, very similar companies in all the ETFs that we're going to cover, at least the pure technology one. So I won't go over the stocks in detail, but you could check them out for yourself. What I want to check out is really the distributions and the yield and things like that. So this ETF has been around since 2011. If we click on distributions, you see that the 12-month trailing distribution yield, this means this is the average dividend yield of the last year, basically. So if you would buy the ETF now at this price, on the price of January 12th, you would have approximately 13.23% yield. That's what your yield would be, but that's based on the last 4 dividends. And it's the last 4 dividends because CI TXF is the only one out of the ones we're going to see that provides a quarterly dividend, not a monthly dividend. So you have a dividend every 3 months instead of monthly, and you could see them here. So the last 4 are here. 41 cents, 39 cents, 44 cents, 59 cents. So relatively consistent, but they could change quarter to quarter. And if you scroll down, you could see the whole history here, of course, as well as the tax breakdown, the tax factor breakdown, which, in case you have this ETF in a cash account, it's always important to check out the tax breakdown so you see, what portion of income is going to be eligible dividends, capital gains, return of capital, or other income. But because these are covered call ETFs that barely have any dividend income, most of it is going to be capital gains and return of capital, guys, which is very, very tax efficient in Canada. So this is your first option here. This option is not leveraged, and CI writes covered calls only on 25% of the portfolio. But they're at the money call. So basically 75% of the portfolio, the portfolio of these stocks, if they go up, you will fully participate in the upside. 25% will not. because that's what they're writing covered calls on. So pretty good. It's working really, really well. If you look at the performance since inception, which is SI here, 11.1%. In the last 10 years, 11.8%. So tech stocks have been on a really, really, really good run in the last decade. So this is why the performance is really, really high. This just means that if you've held this fund for the last 10 years, on average, you would have a return, an annual compound return. This is total return, right? So this is income plus the stock price increase, a return of 11.8% per year on average, which is really, really good. It beats the overall Canadian market by far, and even pretty much the U.S. market. So technology stocks have been on a run, but if you look at like, for example, the 1 year, in the last year, it's minus 35%. So this is where the big opportunity is, guys, because it's really, really cheap. This fund was at one point, I think it's $13.87 approximately now, but at one point it was about $18, $19. So TXF is your first one. The next one is HTA from Harvest. So this is, again, a pure technology covered call ETF, only technology companies. You have 20 stocks in this one instead of 25, so a little bit less stocks. You still have a really nice yield of 9.81, definitely not as high as 13. So TXF is definitely the highest yielding one out of all of them, but we'll go through each of them as well. One advantage I like with HTA is that they are consistent monthly distribution. So you get a dividend every single month, and it's typically, the same amount, very, very consistent instead of quarterly. If you look at the portfolio, still, about 20 stocks, TXF at 25. Similar stocks, right? You're gonna have the same pretty much stocks in all of these anyway, so I won't look at that. If you look at performance since inception, 10.74% per year, so very, very close to TXF. And I believe the biggest difference, or why there's a little bit of underperformance, is probably because the fee is higher. Right, so with this one, the fee is, if I remember correctly, it's 0.85%. Yeah, it's 0.85% management fee, which means the MER is slightly higher, whereas TXF is 0.65. So that's probably where the underperformance comes in. But still, nothing to scoff at here. You have your monthly dividend, and Harvest recently came out with a leveraged version of HTA. It's called HTAE. So this is a great pick as well if you don't mind a little bit of leverage. So this ETF is basically HTA with 25% leverage. That's all it is. So you see that the yield is much higher. It's 12.34 instead of 9.81, which, it should be 25% more. So this one is brand new. It just came out, but, just because it's new, people might ask, well, it's not proven. Well, the only thing that this ETF holds is HTA. That's it. So it holds HTA with 25% leverage. That's why you actually see 126% in HTA. That's the 25 leverage. So this is just going to be a higher yielding, more volatile, or 25% more volatile in terms of stock price version of HTA. So a really good option if you don't mind a bit of leverage. I actually like this option a lot. And we'll go through two other ones in terms of pure technology covered call ETF. Brompton also has one called TLF, a little bit lower yield here at 7%. So Brompton is typically a little bit more conservative with their covered calls. They write less calls, I believe, which captures more growth, more organic growth. So if you look at their performance, 11.11, right? So pretty much the exact same thing. I believe it was 11.11 also. Yeah, how funny is that? So really good performance as well, even though it has less yield. So nothing to scoff at here. If you look at portfolio, you'll see a lot of the same stocks, but Brompton typically likes to add a little bit of funky stuff as a diversifier on top of the big boys. So just off the bat, I have no idea what Gartner is, you see, or Keysight, KLA. So you'll have a synopsis, you'll have a bit of extra, maybe smaller cap, medium cap companies in Brompton's ETF, which is a good idea in my opinion. So this one, I believe the management fee is 0.75. Yeah, so far we got 0.65 with the CI, HTA, the Harvest one is 0.85, Brompton's is 0.75. And last but not least, BMO has one. This is the newest one out of the bunch. It came out about a year ago, so the other ones have been all around for quite a long time, except the leverage one. But of course this one you can't really say that because it just holds HTA, which has been around for a long time. So same thing, same type of deal, guys, all technology stocks. This one's a bit smaller, obviously. Management fee is on par with CI. So 0.65, management expense ratio is 0.73. So the one with the lowest fee is actually CI, the lowest MER at 0.71. But same type of deal here. This is going to have the lowest yield. So as we know, BMO is probably the most conservative with writing covered calls. They only do covered calls on 50% of the portfolio, and it's out of the money covered call. So the BMO one and the Brompton one is probably they're the least aggressive when it comes to writing covered calls. So you'll probably get the most capital appreciation, but the least amount of yield. So those are your 5 pure covered call technology ETF, guys. It's really up to you to choose the one that best fits your style and your personality. If it was me, I really like TXF and HTAE the most, obviously because I really love high yield. I don't mind the 25% leverage. So in my opinion, those are the 2 best options. But hey, if you want one with less aggressive covered calls, you could definitely check out the Brompton one, which from the performance, you could see that it's definitely a good performer. And ZWT, if you look at the performance, it's going to be really bad because obviously it came out a year ago or a year and a half ago. So you can't really pay attention to the performance. It's not really going to give you a good indicator of this ETF because you see at minus 7% in the last year, minus 30%. So definitely your least aggressive option. So those are your 5 pure technology covered call ETF, but I'll also give you a play on the NASDAQ. So in case you didn't know, the NASDAQ 100 or the NASDAQ is basically a second stock market exchange in the US. The US has 2, New York Stock Exchange, right? Wall Street typically. They also have the NASDAQ, and that's where a lot of the technology companies are listed. So by default, the NASDAQ is very, very tech heavy. So there actually is now a pretty much brand new NASDAQ 100 covered call ETF listed on the Canadian stock market. So remember, guys, I'm still on the funds that are listed on the Canadian stock market. It's called QQCC. So this is basically the NASDAQ 100, so very tech heavy, although it's not pure technology, guys, very important. So if you click on holdings, you'll see that technology is 55%. So it's the biggest chunk, but there's other stuff like healthcare, telecom, financials, et cetera, but it's mostly technology stocks. And what they do is simply they write covered calls on not the individual stocks, but the index itself, on the NASDAQ index itself. So this ETF literally holds HXQ, which is a NASDAQ 100 ETF managed by Horizons. And then they just write covered calls on the NASDAQ 100. You see that here. NDX is NASDAQ 100 calls. And I have to admit that this is a really, really interesting option because you see here the estimated annualized yield is over 14% now. It's really, really high yield. They are monthly distributions as well. As you click here, you could see the monthly distributions. You see that they have gone up significantly in November and December compared to the other months. One thing you need to remember, if you look at performance of this ETF, so you'll see a pretty bad performance. This is because this ETF, they changed the name. It used to be called the HEJ ETF, and then they just renamed it to QQCC. So the performance does not take into account the NASDAQ 100. It takes into account the old ETF. So ignore the performance. If you haven't caught it yet, I do talk to the fund manager from Horizons, the guy who's actually writing the covered calls on QQCC. So check that out. We discuss QQCC in detail. So this is a very tech-heavy covered call option, but not a pure technology option like the first 5 that we saw, but definitely another interesting one. This is kind of like a Canadian version of QYLD or QYLG, which I'm going to discuss right now because now it's time to view the American listed or US listed technology covered call options. So in the US, guys, there's actually not as many options, especially pure technology covered call options. Covered call is a bit less popular in the US, but there is a brand new one that just came out from Global X it's called TYLG, the Information Technology Covered Call and Growth ETF. But this does only covered calls on 50% or half of the portfolio. You see that here, right? So what does this ETF hold? Well, it basically holds an ETF, or the biggest bulk, 55% of it, is an ETF called XLK, which is from Spider. And if we actually look at that ETF, it's a very old pure play technology ETF, 39 billion low management fee. So what these guys do, and this ETF, if you look at the holdings, pretty much you could this is what it has. It's literally 40% Apple, Microsoft, and you have a bunch of other technology companies, but very, very heavy on Apple and Microsoft. Guys, so this is really pure technology. So what this ETF does is it writes covered calls on this ETF. That's what it does. It writes covered calls on that ETF, and I'm pretty sure you'll be able to see it here. Yeah, here's the call. Here's the call here it is. So it's an actual covered call on XLK on this ETF itself. So 55% of this is this ETF, and the rest is just the individual technology companies. So this is a pure technology ETF, guys. It's brand new. It just came out, but it's not going to be that crazy with the yield because it only does cover calls on 50% of it. So the yield, only one distribution came out. I don't know what the yield is going to be exactly, but I expect it's going to be about 5 to 7%, something like that, which is still not bad on technology stocks, but there is a lot of capital appreciation upside with this ETF. So 12.2 is the first monthly distribution. Let's just calculate the yield real quick. If you do 12.2 times 12, you get the annual rate. Right now the NAV is about 25, so if you just divide it by 25 times 100, we should get a pretty accurate sense of the yield. So yeah, 5.85. So you're probably looking between 5 and 7% yield with this ETF. So this is a pure technology covered call ETF, but it only does it on half of the portfolio, brand new. Let's look at some other pure technology options in the US with covered calls, right? I'm only covering the ones with covered calls, everyone. I did find two closed-end funds. Okay, these are not ETFs, they're closed-end funds from BlackRock. There's Science and Technology Trust, BST is the stock symbol, and then there's Science and Technology Trust 2. BSTZ is the stock symbol. So if you scroll down here, you see that writes call options, right? So this is a covered call ETF, guys. And I got this question recently, what's the difference between BST and BSTZ? Well, BST is your more conservative, larger cap stocks. There's less smaller caps. So if you click on holdings and scroll down, you could actually see Apple, Microsoft, MasterCard, Visa. And you might see a couple of these things called Project Picasso. This is like private equity. There is a little bit of private equity in here, but if you look at the market cap breakdown, the majority of the fund is in big, large cap companies, a little bit in small cap and mid cap as well. You could click on sector here, software, semiconductor. So it is almost all technology, not 100%. There's some other stuff in here because this is not a tech specific ETF. It's a science and technology closed-end fund, rather, not an ETF. But it's mostly technology. So right now you're getting a yield of 9.5%, which is pretty good. Much higher than this one here. But it is a closed-end fund and it's trading at a 4.33% premium. What does that mean? In case you don't know what closed-end funds are, the net asset value is what it's worth and the market price is what it's trading for in the stock market. And you can see here the market price is higher than the value of the fund. So it's trading at a 4.33% premium right now. So there's BSTZ, and this is actually a very interesting one because it's trading at a big 15% discount. So it's the opposite of BST. So you see here that the value is more than the market price. So by buying it at 17.18, you're getting a 15% discount on the value of the fund. And the distribution yield is 13.31%. It's absolutely huge. However, this is probably at risk at getting a dividend cut. So this is, don't forget, these dividends are not guaranteed, but they have not reduced it. You could see here that the dividends have been 19.5 cents a month for quite a long time, and they've actually increased it throughout the year. So this one has been around for quite a while, and both of them, by the way, have phenomenal returns. This one has 14% average return annually since inception. This one here has 9, but it's a bit newer. This one came out in 2019, so it's a lot newer than BST, which came out in 2014. So the difference is this one here has, very interesting, 25% in private companies. Also does the covered call. So if you scroll down, you will see that this one even has a lot more of the project holding. So this is probably private small companies. So really, really cool. If you look at the market cap, it does have a lot more smaller than mid cap companies than the BST one. So definitely your more riskier, high reward, high risk, high reward option, BSTZ versus BST. But it's up to you to really, figure out which one you like the best, if you do want them. Now, in terms of the NASDAQ play, we have quite a few options. There are 3 options. Of course, you have QYLD. This is the OG here. It's a NASDAQ 100 covered call ETF. So they write at the money covered calls on the whole portfolio. So you're going to have the highest yield here with almost no potential upside. So they typically try to give you 12% yield a year on this. So the 12-month trailing year yield dividend is 14.21, but based on the last dividend, it's 11.6. You could always expect around 12% yield with this one. So this one still has room to go up. A lot of people think, QYLD writes 100% at the money covered calls on the whole portfolio. It's never going to go back up. I disagree with that. It still will, just not as much as its brother ETF, QYLG. So QYLG does the exact same thing QYLD does. It's NASDAQ 100, it's covered calls, but QYLG only does it on 50% of the portfolio. So it's like a half version of QYLD. So QYLD 100% income, QYLG 50% income, 50% growth. But of course, you'll get about half the yield of QYLD. And you see that here. It's about 6.86. That's the average of the last 12 months. Based on the last dividend, it's 5.81. So QYLG is a bit newer. QYLD has been around for a really long time, 8 years. It's been 9 years now. So, depends on what you want, guys. This is really personal preference. I own QYLD myself. QYLD is in HYLD as well. So you have these options. And now we also have JetQ, your third option, which seems to be the better one out of QYLD and QYLG numbers-wise. Numbers don't lie, guys. It has a really, really high yield. It has a low management fee of 0.35 instead of QYLD and QYLG, which has higher ones at 0.60. This one here, I believe, is also 0.6. Okay, it's a bit higher. No, it's 0.60 as well. And these ones are going to be your highest. So closed-end funds, that the fees are always typically higher because they're more actively traded. So this one here is 1%, and the other one, I believe, is a little bit higher at 1.25. Yeah. So JetQ is really gaining steam. It's basically JEPI's twin brother. It's a play on the NASDAQ with covered calls, but unlike QYLD and QYLG, they do it manually. It's more actively managed with a lower expense ratio. So it's picking up steam. I think this is probably the best option out of the 3. I gotta be honest. They're all monthly dividends as well. They've been really, really stellar, been going up with the volatility. So JetQ is another NASDAQ 100 covered call option you have. So you have QYLD, QYLG, and JetQ in summary, guys. And then for your pure play, it would be BSTZ, BST, and TYLG. So it's up to you to analyze them and pick which one you want. But all of these really will capture the big opportunity that we have in 2023 if technology sector recovers. Hey, don't go yet. I have some important reminders, including some more recent ones, and I'll try to keep it as brief as possible. And for everything that I'm about to discuss, the links and info are in the video description below. So first of all, if you didn't know yet, I do offer a one-on-one coaching session where you'll have a 1-hour Zoom call with me where you could ask me all the questions you want, and I'll help you and assist you best I can. Just remember that I am not a licensed or registered financial advisor or planner. So to book a session, go on my website, PassiveIncomeInvesting.ca, and right there on the homepage on the left-hand side, there is a small video. Watch that video to know how to book a one-on-one properly with yours truly. Also on my website, you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once. And this is really a reference tool or a companion tool to help you build your own portfolio according to your needs and your objectives. It has lists of funds. It has sample portfolios for both Canadian investors and American investors. So make sure to check it out on my website. I actually created a video which shows the product from A to Z because I don't want you to spend money unless you know exactly what you're getting. So make sure to check that video out on my website. And don't take my word for how good it is. Check out the reviews. There's over 300 of them, and they are all 100% real reviews. So here's some more updated news or recent news. I am now on Blossom, a new investing app designed for investors. I've been using using it for a few weeks now. I think it's really, really great. It has a really cool feature where users could actually add and share their portfolios and what they're buying and selling every day. So you could actually link your investing account so it's updated automatically on a daily basis. I recently added my own main portfolio so you could follow how my portfolio is doing live and what I buy every month. Really, really cool. It's like a mix of Facebook and Twitter, but specifically for investing. So get on your phone, click on the link in the video description below and download the app. It's 100% free, so you too could share your portfolio. Just remember to look for me and follow me. My username is Adrian, PII altogether. Also, I do have a referral link for Questrade, so you could get $50 worth of free stock purchases. This is the Canadian discount broker that I use and I recommend. Unlike Wealthsimple, the other popular discount broker in Canada, you could drip everything you want. It has all the stocks and it also has dual currency accounts. Very, very convenient if you're buying both Canadian stocks and American stocks. I have a Questrade video, by the way, which gives you a little tour of the features, so make sure to check that out. I also have a referral link for PASSIV. This is the portfolio tracking tool that I use to consolidate all our accounts to get a nice bird's eye view, so you can consolidate all the information together for easy tracking and stats as well. Also, our Facebook group, Passive Income Investing, is now an invite-only private group. So to join it, you need to click on the link in the video description below and give the group a like to get invited. So we take pride in making this one of the best investing Facebook groups out there with over 13,000 members. There's no scams, there's no spammers, and negative and doomsday people, we kick them out right away. Also, follow us on Instagram if you want a little bit more of our personal journey here in Panama. And lastly, just remember everyone, I am not a licensed or registered financial advisor. This channel is all about my personal investing journey and how I invest to generate high passive income from a diversified portfolio of high yield funds. It's for educational purposes only, so don't forget to do your own research and due diligence. And of course, stay safe everyone, stay healthy, and of course, stay passive. See you next time.